Here, I wanted to see the dollar go lower. I expected it to take out that low. But because it was showing an unwillingness to perform or show any willingness to go lower, how did I get to the point where I didn't trust it? Talk about how when we don't want to take a trade, when there's something in the price action that says don't do anything. Okay, let's do that right now. Here we have this low right there. See that little pierce below it right there? A little tiny little short move below that low right there. It can and it could have very easily traded back up to this level and then resumed. If it would have done that, then the dollar really would have been bearish longer term. But because it consolidated, I want to see, does it have confirmation through the bond market? All this consolidation is going to be shown in the bond market. When I go to the daily chart for ZB M23, which is a symbol that's used for bonds, it's not the month that you should be trading or tracking it now. Its volume has rotated into the September contract, but I'll show you what I mean in a second. To understand how the dollar is likely to perform, I use the bond market. Okay, and right away, some of you that just want to have one market, you want to be real simple and short and sweet, this is where most of you drop off because oh, this is complicated. If that's how you feel, folks, don't watch my videos. Okay, I promise you, you'll do something. 023 was in a range, okay, and I want to see it go down into a discount. If the bond market goes down to a discount, that would result in the dollar index moving into a premium. Here's that range. Okay, we were in this range, and until this range was given up, until it left this range, dollar wasn't doing anything. Equities were going to range bound. That's why I stayed out, taking RV road trips. I don't care about the price action when it's in here like this. Can I trade that? Absolutely. Can you trade it? Absolutely. But to meet a expectation in the community that's been craving higher time frame charts, swing trading ideas, can you do something off the 1 minute charts? I don't know why he's always talking about the 1 minute charts. The reason why is because it gives me lots of teaching examples where I can call it before it happens and it pans out precisely. And that is where you should study. Whether you trade them or not, you should study those lower time frames because you're getting so much experience by using lower time frame charts. Because it's not noise like the Goldman Sachs boys will tell you. There's absolutely a rhyme and reason why prices. Listen, is it a different price? In a manner that the higher time frame outlines. This is right now this price action on the June contract for bonds. So you can see it's real spotty. Okay. If you use ZB, I'll come back to the daily chart in a second. I just want to make a point. Okay, that's the symbol that's being shown right here. ZBM2023. The M is the futures contract month code for June. All the volume is rotated into now the September contract. So that is going to be the U symbol. Watch how all these little dots become much more smoother. See that? That tells you that all the volume and open interest is now rotated early in the bond market. S&P, the June contract is still favored, but it will be changing here shortly. Now let's go back up to the daily chart for bonds and I'll tell you what I was doing, what I was thinking. I'm going to go to the June contract because that's what was being traded in April and May. Okay, so here's the business on the bonds. We're in this range. I wanted to see this break that range. Oh, he's a breakout artist. I knew it. ICP's a breakout. Okay, God bless you. Run with that idea. That's not what makes markets go up and down, though. Market profiles, to me, is a schematic. It's a behavior, a graph. Now, if you go into my core content on my YouTube channel, which was premium content, people had to pay money for that. Those lessons are the language that my students had to understand when I was doing live educations and analysis every day. Every single day I was doing analysis. And I was on the spot every single day, calling every single day what it should perform. Where was this mad rush of people coming out saying ICT's a fraud, he can't do this stuff, I'm paying him, he didn't call that right. It never happened. If anybody's going to expose me, it would have been those individuals that paid me. You're seeing the testimony again. It's happening in front of you. I'm teaching you the logic. You're getting it right from the source. I needed this range here to leave. I didn't care if it was going to go higher or lower because I didn't know at the time which one to trust. Because remember, on the daily dollar index, I wanted to see that low taken out. That's what I wanted. But I had to submit myself to what price was showing me. It was not willing to go there yet. So I had to take a step back and wait. Wait a minute, man. You're supposed to be at 30 years experience. Right. That 30 years experience gave me the insights to say, sit still, bro. Sit down. This dance ain't for you. Sit down. Wait. Let the elephant enter that swimming pool. Think about a children's swimming pool. Okay, a little tiny little swimming pool. If a swimming pool the size of a child would use, if you fill it up with right here, when we saw it close right there outside that range, that sets the stage for up move in dollar. But I have to wait. I have to wait for something. This is Wednesday, May 17th. Let's go back over to the dollar index. I know I should the shift in market structure. So this high broke to the upside. How can we qualify that as a shift in market structure for the dollar to keep going higher? I just taught you. Are we seeing a mirror image that would constitute an expectation for the bond market to end right there? I know I should have charged you money for this. All right, so here is May 17.3. There. Okay. Lo and behold, that's the day that the dollar index is trading inside of its fair value gap right there. After post the shift in market structure. So this high broke to the upside. How can we qualify that as a shift in market structure for the dollar to keep going higher? I just taught you. Are we seeing a mirror image that would constitute an expectation for the bond market to enter a sell program? That means bonds going down, dollar going up. Ooh, we're in consolidation. We're in uncertainty here, so I have to wait. When this happened, okay, all focus goes to this fair value gap. But now, I don't want to see it go up here to go short. Why? All this stuff that's happening in the other side of the world. I'm trying not to use words that will flag my channel because I've had friends that are not even... All that stuff was a catalyst from a macro perspective, which is why I didn't believe that fair value gap would be a short. Now, if it would have went up here and started to sell off, like I said, I would use a lower time frame, 4-hour, 1-hour chart, short of a premium like that, and get in sync and then run for these lows here. But the context that I went into and I shared with you was I want to see that weekly fair value gap trade above it and come down and treat it as support. Look, this is the daily chart for the dollar index. Look where the bodies, on the lower end of that gap, look where the bodies were. Was that not respecting that weekly gap? That's not supply and demand, and that's not support resistance. This is algorithmic. It's referring back to a level I drew your attention to beforehand. Now, how can I do that? I'm not a time traveler. There's logic there. That means there's something going on in price delivery that is well beyond buying and selling pressure. It's rigged. And there shouldn't be any reason for you to be upset about that. It shouldn't scare you. You should be thankful. You should be thankful that they rigged these markets. Start punching the air. Hey, folks, that's exactly what we were looking at in the 90s. High volatility. When Forex shrank up and all the pairs had smaller ranges, social media, it was constant.